Welcome back to today's episode of Professors in Property with the phenomenal David Clouter and me, Andrew Roberts. Today we're discussing the 9 great ways to raise money to invest in a property. You could also downsize your property, couldn't you, David? And perhaps release some equity from it.
Yes,
is that something you've ever done?
I have actually. Yes, I'm quite a habitual downsizer because as the family kind of flies the nest, you no longer need that 74-room mansion, so you can downsize to a 72-room mansion. Yes, but seriously, it's a very real strategy that can be done. Suppose you've been living in a 4 or 5 bed family home, and then there's just the two of you. Well, a smaller house or even a flat might suffice for your needs. And bear in mind that all the equity that you release by downsizing will be free of tax. We should say at this point, actually, that if you've been following our advice earlier in the video and suppose you've been running a business from home, take tax advice on the capital gains implications of that. If you've been doing the thing that Andrew mentioned earlier, the rent-a-room scheme, it's important in the contract for renting that room that you emphasise that that room that you're letting out is for shared use. So you might have your gym weights in the corner of that room. You might have a bookshelf in the corner of that room, and make sure that it's included in the rental contract that you have the right to use that, and then the area is not being exclusively used for that purpose. And then certainly at the time of recording, then the capital gains thing there isn't an issue. But the longer you've lived in your property, because over time property prices tend to rise in an upwardly direction, the more money there's going to be available to release in that way. And after doing your sums very carefully, it can be a good way to raise some deposit finance.
Yeah, and we're saying that downsizing to release equity, it could be a good way of raising money for investment properties. Obviously, you wouldn't downsize to release equity to buy a new home because you've already got one. But what you might be doing is downsizing to release not so much the equity, but release the mortgage from the property. That way you're living unencumbered without a mortgage. Or, in addition, you could sell the home altogether and go and rent something smaller to release cash to use as a buy-to-let investment. And this is not investment advice that we are sharing. These are just different things that people do, some of which we have done, some of which people we know have done in order to release or create cash to invest in property. So,
yes.
Have you ever remortgaged, David, to release cash?
Yes, I have to say that I have, and that is another way, again, that money can be released to invest in other things, and you don't have to have owned a property very long for the property price to have arisen. Obviously, there are property cycles. The market is cyclical, but the long-term trend is that in most areas of the UK, property prices move in a generally upwards direction, which means that there is some money sitting there. If you're remortgaging your own home to release cash, obviously your earnings have got to support the repayments. Sometimes, you might be working a bit of overtime for a while to increase those figures so that you can show the bank statements to the lender, and again the lender might or might not accept that, but it's certainly it's a way of using your home, if you like, as a kind of savings facility, and it is a useful thing. It's not something I would do all the time. And as Andrew said earlier, we're not giving any sort of investment advice on today's video. And before making any sort of investment, it's always good to have a chat to property professionals. You'll have an accountant you can speak to. There are brokers you can speak to, and there are people who can advise you on the finer points of all this sort of thing. And we're just discussing these strategies in broader terms, hopefully to help out.
Well, it's important you really take advice on the next one, because tapping into your pension, I mean, I'm too young to do this, but David, I mean, you must have perhaps tapped into your pension. I know at the age of 55, you can tap into that pension. And there's been newspaper headlines with people purportedly withdrawing their pension to go and buy a Maserati or fast car of some description.
Well, I ride around on a Rally Pioneer bicycle, so I didn't need to use that particular stratagem. And I think if you're going to invest in something, you need to invest in an income-producing asset that doesn't really depreciate. So fast cars and all that are not for me. Antiques don't really produce a monthly income either, so all those sort of asset classes don't work. Property, as it happens, does, and it produces it's a very good inflation-proof thing. So and being an elderly gentleman here with my Zimmer frame, I actually when I released some money from my pension, I was a young 50, and I just got in time before the age increased. So I released a little bit of cash, and all I used it for was to reduce a particular mortgage on a property, and I thought that was quite a useful thing. And the pension went down a little bit, but not perceptibly, but the mortgage took a big chunk out of a mortgage that I had, so that worked for me. So there's many ways to be creative in this sort of thing, Andrew. But obviously you have to remember that your pension is your life savings pot. So my strong recommendation would be not to invest in something volatile. But if it's a sure bet, if it's a sure thing, then by all means that can work.
If you'd like to know more on any of these topics, drop us a question or a comment below, and we will endeavour to answer that for you as quickly as we can. If you've enjoyed this video and you think other people could benefit from it, hit the share button. We'd love it if you like the video, and we'd double love it if you subscribe to the channel as well. So it's thank you from the Professors of Property. I'm Andrew Roberts.
And I'm David Clouter.